Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 1st of December. Rather late edition today. Starting off with Beowulf Mining, where it's always good to see a stock exceed the rising trend channel that's been drawn, especially when it looked rather ambitious. We had the trend line break there from back in January around the 4 pence level, and at that point we could project the shares up to 7 pence, which has been exceeded. We could get up to 8 pence at that top of that broadening triangle from back in October last year, maybe for the near-term peak for the shares over the next few days. This stage, the upside valid while we hold above the old September peak at 6.25 pence. So if you're a fan of the shares, you want to ride them higher, then that would be the notional technical stop loss. On to Bay Capital, which is here, and it's obviously not much charting data, but it looks like it's having a second go at the upside. We've got that sort of a broadening triangle, not quite a triangle, but you get the picture, from that resistance line there at the end of September, and a support line there coming in with the last week's support around 23 pence, above 23 pence, looking for the resistance line to be hit maybe over the next month or so as high as 43 or 44 pence. So maybe by the end of this month or the middle of January, provided, of course, we hold above 23 pence. Good spurt higher today for Conroy Gold and Natural Resources. Here we have a break of that resistance line there from back in January, around the 22.5 pence level, above, at least while we're above the initial November peak at 24.5. We're looking for a March resistance line target as high as 35 pence. Perhaps as soon as the end of the month. Sort of multiple support points there, I suppose, near 20 pence, where the giveaway that the shares were finally ready to break higher. Moving on to a stock which I've covered a few times. I suppose I covered it a bit early, actually, in terms of the potential recovery here, but it looks like Gunsynd is finally on its way. You can see that the shares have broken recent sticky resistance around the 1.05 pence level. Looking for an end of day or a weekly close above that, and that could take the shares up to the long-awaited and long-promised 1.5 pence area, which is currently where the 200-day moving average lives. This stage only back below 0.9, really upsetting the recovery argument. Speaking of potential recovery, we've got Guild Esports, which has been one of the more horrible situations over the last year or so, especially with that last breakdown after a multiple top there at 8 pence. Here the shares, maybe they're just going to give us a little bit of at least an intermediate rally. We're bounced off that line of support there from May. We've got bullish divergence with that lower price low, which is normally a good thing, and a key reversal to the upside off support. Another good thing as well. So hopefully up to at least the 4.25 pence area, or perhaps 4.5 pence, even if the shares then sell away after that. But I think after the declines that we've had from 8p to 3p, maybe it's time for at least a sort of a modicum of a rally or an improvement for the shares. On to IDO Group, which gets sporadic coverage here. Here we had a break of that resistance line there from January. That was at 0.9 pence. Since then we've tracked mostly sideways, but bounced off that rising 50-day moving average. And the longer we stay above the 50-day line at 1.16 pence, the greater the chance of move to the top of that rising trend channel from February, as high as 2.7 pence perhaps by the end of January. If you're cautious on the shares, maybe you'd wait either for an end-of-day close through the 200-day line at 1.29 or even the October resistance at 1.63. But I think enough has been done here to prove the recovery argument. Stock which has slowly started to recover and looking more steady than of late is Okyo. Here we've had, I suppose, the main plus point here, apart from the break of that February resistance line at 4.3 pence, was the as yet unfilled gap to the upside. And whenever you see a support point come in above the top of a gap, that's normally a very strong signal. Suggests that we're in a rising trend channel from July heading towards 11 pence, and that could be hit perhaps by the end of next month, at least while we're above the 6 pence level of the July trend channel. Onto a stock where there was a lot of interest yesterday, actually, surprisingly enough, but today was the announcement, I think, of the US listing. Here we've got OxfordCAN, and here the resistance line target, they're up towards 5.3 pence, which seems rather ambitious, but after the extended decline that the shares have had and the break of that resistance line from June at 2.7 pence, we could see that over the next 1 to 2 months, especially if we can get a decent close, a weekly close above the 50-day moving average, currently around 2.5 pence. So better times seem to be on the cards there. Situation with Mega Diagnostics looking rather better than has been for a while. I have to say I felt as I was a bit harsh on the shares yesterday, and I think they've responded in kind. We've had a key reversal to the upside, coming off very oversold RSI levels under 20, which is normally something to take note of. Initial target here, the top of that gap there at 39 pence. I think that should be relatively easy, even if the shares fall away after that. Best case scenario, maybe at this stage, up to the 50-day moving average at 44 pence. But a nice surprise rebound for Omega, and I'm sure it was welcomed by their shareholders. Another recovery situation in the making is Oracle Power, where the fundamentals seem to be improving by the day almost. Here we've had the shares break that line of resistance from February. They did that around 0.37, held the 0.3 area, didn't make any new low, so that is a positive. And today it looks like we'll close above the 50-day moving average at 0.37. Above that feature, we're looking for a retest of October resistance through 0.5 pence. And if you're wondering what the expected trajectory is here, it's probably up to the top of that broadening triangle that we have there from the end of September, the beginning of September rather, up to as high as 0.6 pence as a best case scenario target. Also good to see a stock which has been in the wars of late emerge from the darkness. Broke that line of resistance for Sound Energy around 1.4 pence yesterday, and that the giveaway that there could be a big move was actually what I'll show you now if I can, which is a one-day island reversal, which is a very rare thing to see. So you gap down and then gap up again off the lows. Brilliant bear trap there, and the shares obviously got the bears on the run. Looks like we'll hit that July peak at 2.5 pence over the next few weeks, especially while we hold above the last August peak at 1.7. So above 1.7, 2.5p should be on the cards. Otherwise, maybe it's a slower progression to the upside. Finishing off with Wishbone, which had its rally earlier in the month. The good thing, I suppose, is that even though we've come back from the 200-day moving average bull trap that we had through 12 pence, didn't quite get to the 14 pence target we were hoping for. Above the 50-day moving average at 9.5 pence, we are still on for that July resistance line projection, 14.5 pence. And that could be hit by the end of the month. That's it from me today. More updates tomorrow.